The BIS already acts as a custodian of gold for many central banks and has long experience facilitating international coordination. They're heavily involved in trading gold, and they don't trade really for their account. They trade for the accounts of their clients. And who are their clients? Well, the central banks. So this is going to make the gold market, the bullion market, even more opaque. Yes, this is just a distraction here. So what would make the gold market fair and open and transparent? Well, unfortunately, something big would have to happen, like the disappearance of central banks, a return to free market banking or free banking.
Mario Innecco, a longtime precious metals analyst, highlights the fragility of the gold market. Back in January, the Financial Times revealed that deliveries through the LBMA were no longer taking the usual 2 or 3 days but had stretched out to 4 to 8 weeks. Calling this a logistics issue was a polite way of covering up what was essentially a default in slow motion. Around the same time, the LBMA and COMEX were scrambling over bar sizes, another reminder that the paper market and the physical market don't always line up. An FT opinion piece went further, arguing that gold trading was too important to be left to private clubs like the LBMA. The proposal was that the Bank for International Settlements should take over, since it already acts as custodian for central banks' gold reserves. Innecco is skeptical. The BIS may sound like a neutral referee, but in reality, it is even more opaque than the LBMA. Yes, it stores gold, but it also trades it aggressively on behalf of central banks. That means putting the BIS in charge doesn't make the system more transparent. It drives it deeper into the shadows. So what would fix it? Innecco's view is blunt. Nothing short of removing central banks from the market entirely and allowing a genuine free market in gold. Until then, debates about reform are more theater than solution. As long as official players dominate, price discovery will remain skewed and trust in the system will stay shaky. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
If you remember well, a couple of weeks ago or so, the gold futures market went into, spiked a lot higher compared to the spot market, international spot market. There's a huge premium. Gold traded above 3,500 in the December contract, I think 35. And there was talk that the Trump administration would be putting a tariff of 39% on 100-ounce gold bars and 1 kilo gold bars. And these bars, of course, are the bars that Switzerland exports to the COMEX. So what happens is that the 400-ounce bars from London go to Switzerland, they get refined and turned into those 100-ounce and 1 kilo bars, and those go to the COMEX because the specification for the COMEX contract doesn't allow for 400-ounce bars, and they prefer those bars. And this would have destroyed this EFP paper game that the bankers play. And then the administration had to come out and say that no, these are going to be exempt from it, and that the president would sign an executive order to take gold off this tariff. But yesterday I saw a post by Ronan Manley, and Ronan Manley is actually a very respected precious metals analyst from Singapore. You can find him on X at Bullion Brief. I think he still works for Bullion Star, their precious metals dealer out in Singapore. And he said, what happened to the imminent executive order on gold that the White House said it would issue to clarify the customs CBP rulings? It's a customs organization on gold bar imports. Is a Truth Social post by Trump saying gold will never be tariffed now the equivalent of an executive order? So just wanted to let you know that there has been no executive order, and technically there's a tariff on kilo bars and 100-ounce bars of gold. So according to the U.S. Customs and Border Protection, that's what CBP stands for. So let's move on to the FT. And actually, this article that I'm going to bring up is from about a week ago, and this was in response to a lot of the mess that's been going on, and this one included the 100-ounce and 1 kilo bars, but more the fact that back in January, end of January, and I think I was one of the first people to report this on social media, on YouTube, that the FT had come out with the story saying that the LBMA's spot delivery for gold was extended to 4 to 8 weeks instead of usually 2 to 3 days. And that was a huge story. So it was technically it was a default. Bank of England gave all these excuses, right? And then we got this a couple of weeks ago, this mess going on with vis-a-vis COMEX and these bars. And the fact that the LBMA, they just want to have the 400-ounce bars. Why couldn't the LBMA refine a lot of the bars for delivery for COMEX, right? And so we've got an article here. It is an opinion, so maybe the FT doesn't have the same opinion, but they wouldn't be putting this guy on here if they didn't believe this to be so, and that's why I'm saying that the FT has changed its tune, and it has to, of course, and we're gonna look at this in a second. But so yeah, exactly a week ago, Bernhard Schnellman published this. He said the gold market is too important to be left to private clubs. The institutions underpinning the trading and storage of the precious metals remain opaque and under-regulated. One thing I would say to Mr. Schnellman is that the LBMA is really controlled by the Bank of England. It is a private company, but you look at the people who have run that or been chairman or CEOs of the LBMA, they're all like ex-Bank of England. So the Bank of England is really in there. Yes, it's true that it does very little regulating of the trading that goes on. It's more the banks, the bullion banks, that self-regulate. And I've spoken about this with David Jensen. I'm going to put some links to some of his videos that he explained that. But the thing is the solution getting the BIS to look after the bullion market? Well, I don't think it is. Mainly because the BIS is even more opaque, and it's not transparent at all. And we're going to look at the history of the BIS, and I think you might be surprised. Well, some of you not, because I've spoken about it before. But this is what Mr. Schnellman, Mr. Fastman, Schnell in German, says. He says the ECB's call to assess risk related to the gold market should be taken seriously. A practical reform would be to explore the role of the Bank for International Settlements in overseeing core elements of gold market infrastructure. The BIS already acts as a custodian of gold for many central banks and has long experience facilitating international coordination. While they're not just a custodian, they are the ones, in my opinion, and this is speculation, but they're heavily involved in trading gold, and they don't trade really for their account. They trade for the accounts of their clients. And who are their clients? Well, the central banks. So this is going to make the gold market, the bullion market, even more opaque. Yes, this is just a distraction here. So what would make the gold market fair and open and transparent? Well, unfortunately, something big would have to happen, like the disappearance of central banks a return to free market banking or free banking. And the public would be involved. The public would get the information. That's the only way. But we're not going to get the real deal from the BIS because they're one of the most opaque and private institutions on the planet.
Mario Innecco says that central banks, such as the Fed, the ECB, the Bank of England, and the Bank of Japan, don't just answer to their home countries, they also work for the Bank for International Settlements. Innecco emphasizes that when these officials travel to Basel every other month, they do so on BIS diplomatic passports. That means Jerome Powell, for example, has 2 passports. With BIS credentials, they pass through borders with no security checks, no customs, and complete immunity. No court in the world, not even the International Court of Justice, can touch their documents. Innecco states that the BIS was founded in 1930 by the central banks of Belgium, France, Germany, Great Britain, Italy, and Japan, as well as major U.S. banks like J.P. Morgan. Its founding capital was 145 metric tons of gold because gold was real money. He stresses that the early architects included Montague Norman of the Bank of England and Hjalmar Schacht, later dubbed Hitler's banker. During World War II, the BIS even facilitated German access to Czechoslovakia's stolen gold, which the Bank of England had handed over. Innecco emphasizes that this history matters because today some, including the Financial Times, suggest giving BIS control of the gold market. To him, that would only push it deeper into the shadows. He says the BIS has always served powerful banks, not the public. And now, with its push for central bank digital currencies, Innecco warns the goal is clear: more control over people, not more transparency in gold. Let's get back to the interview.
Central banks like the Fed, ECB, Bank of England, Bank of Japan, they also work for the BIS. They've got a dual role. And so when they travel every other month to meet at the BIS in Basel, they travel with a diplomatic passport. So that means that Jay Powell has 2 passports, his American passport and a BIS passport. And they travel as diplomats, and they go through security and customs. There is no security and customs for them. Their documents are sacrosanct. No one can access them. No court in the world can access them, not even the International Court. But who owns and who created the BIS? Well, it's all hidden in plain sight. And I made sure that I've copied this from one of their documents because I'm not sure how long they're going to keep that public. So I've got the constituent charter of the Bank for International Settlements right here from 20th of January, or as of 20th of January 1930. That's when it was founded. And I'm going to come back to the book to tell you about who founded this bank, really, the 2 men that were the founding fathers. It says here, whereas the powers signatory to the Hague Agreement of January 1930 have adopted a plan which contemplates the founding by central banks of Belgium, France, Germany, Great Britain, Italy, and Japan, and by financial institutions of the United States of America, of an international bank to be called the Bank for International Settlements. You might be asking, why did the Fed was not involved like the other central banks? Well, because the U.S. was not part of the League of Nations structure, so it couldn't send a Federal Reserve. And I would add that all these central banks at the time were private. Yes, a lot of them have become public, but they're really still controlled by the bullion banks, the big banks. I'll continue here. It says, and whereas the said central banks and the banking group, including Messrs. J.P. Morgan Company of New York, J.P. Morgan, the biggest bullion bank, they're going to be in charge now. Again, they're in charge in the LBMA. They'll be in charge at the BIS. You can bet that. The First National Bank of New York, New York, and the First National Bank of Chicago, Chicago, have undertaken to found the said bank and have guaranteed or arranged for the guarantee of the subscription of its authorized capital amounting to 500 million Swiss francs, equal to, 145,161,290.32 grams fine gold, divided into 200,000 shares. So I'm going to stop it right here. Yes, this bank, of course, capital was gold. Of course, gold was money back then, and it still is. And yeah, so who were the founding fathers? Well, it was Hjalmar Schacht and Montague Norman. Well, Hjalmar Schacht was, there's a book about him. It's called Hitler's Banker. And Montague Norman was governor of the Bank of England from 1920 to 1944, almost all throughout World War II. And in this book, there's a section here where it talks about the gold that the Germans basically stole from Czechoslovakia when they invaded in 1938. Czechoslovakia, yeah, nowadays there's Czech and Slovakia, but back then it was Czechoslovakia. They had gold at the Bank of England, I think for their own account. They had gold in Prague as well, and I think the Germans took that gold. It was quite easy. That's the first thing they did when they invaded a country. They went to the central bank, not surprisingly. But then they had a problem because Czechoslovakia was prudent, and then they sent, well, maybe not prudent, they sent their gold, a lot of their gold was at their account at the BIS, at the Bank of England. And guess what the Bank of England did? Well, Bank of England must have told the Germans, no, you can't have it, right? No, you're wrong. Montague Norman gave the Germans the gold. So that's the kind of institution BIS is. And during World War II, all the representatives of the warring countries, like not just the Allies, but the Axis as well, were doing business at the BIS. It was only the Norwegian delegation at Bretton Woods that wanted this bank abolished because that was because they could see that it was financing both sides of the war, and it helped the Germans invade Norway, right? But guess what? John Maynard Keynes, the British representative at the Bretton Woods conference, said "Niet." You know, he said, no, we're not going to do it. So they kept the BIS alive. So that's the kind of bank now that the FT and Mr. Schnellman is pushing to run the bullion market. Do you think it's going to get any better? No, it's going to get worse. I think the more I think about this was just a big distraction for the public. It's like saying, look, gold is finished, don't worry, ignore it. It's really a barbarous relic. The pointless of holding it continues to sink in. And I think it's kind of almost criminal, financially criminal for the FT to have done that. And they issued this editorial, of course, or published it on April 16th, 2004, when gold was at $400 an ounce. And the reason I have it laminated like this is back then, of course, there were no iPhones and smartphones. There was the BlackBerry, but you didn't have all the apps. And I used to buy the paper every morning when I went to work, and I was reading this while I was waiting for my train, like at 6 in the morning. And I'd been buying gold for a couple of years already, and I thought this was outrageous. But then I started noticing that maybe this is fake news. It's my first kind of experience with fake news, and it was. Because now, as I said earlier, and I do have to admit, it's not the FT itself, but someone that wrote for them. But this guy says, gold remains a cornerstone of financial security for institutions and individuals alike. So, as the old saying goes, leopards don't change their spot. And the BIS is going to remain the shadowy secret bank that it's always been. And I think we know that what the BIS wants, and the managing director, Mr. Karsten, said, we want to control the public even more. We want to know what everyone's doing, and that's why they're pushing also for this EVO digital currency, central bank digital currency, right?
History shows that whenever gold markets fall under the grip of powerful institutions, the promise of open and fair trade gets buried beneath layers of privilege and secrecy. The BIS may wear the mask of neutrality, but its record suggests it has always served the interests of its own circle rather than the wider public. Unless genuine independence is restored, calls for reform risk being little more than a smokescreen. With trust already fragile, could the next chapter in gold's story be written not by policymakers or bankers, but by a market finally freed from their grip? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Additionally, if you are interested in Bitcoin-related news, consider subscribing to our other channel for more updates. Thank you for the support, and I hope you enjoy the video.